Alison. So as Alison has said, I'm just going to be hosting the Q&A. We will definitely finish by 2100, but we will also keep going as long as the questions and the interest is there. If we can finish early, we will do so, and you can have some of your evening back. For this evening, we have a rare situation in that I personally have submitted a number of questions, and in the order in which they were submitted, I'm going to go first. And I have a question for you, Lee, and it's: what can individuals do to increase the take-up of sustainable finance?
Thank you, Jeff. That's a good question. And so one thing is, I suppose, they can speak to their bank. I mean, most people still deal with banks as prime contact, but and ask, what are you doing? Or rather, also, there's a lot of information out there where you can check how is your bank, your financial service provider, faring regarding sustainability. There are now, of course, all kinds of green financial products out there. Everyone is trying to portray them as green champions. So, you will not find any financial institutions in the UK who will say, oh, no, we don't care about climate, we don't care about sustainability. But the problem is that for individual consumers, it is still, a very opaque situation. There are a lot of financial products out. So if you buy, for example, some investment product, so some fund, invest in a fund or so, then you will have all kinds of ESG products or aligned products, so environmental, social, governance aligned products, kind of green funds, sustainable funds, whatever. The problem is that we're still really lacking transparency on how green many of these products really are. So financial supervisors in the UK and also elsewhere have started to develop taxonomies, so to provide standards on what is green and what not, and so this is now kind of being rolled out. But for the time being, we still have a lot of what's called greenwashing. So financial institutions pretending that something is green, while in fact it's not that green. And so a lot of the ESG sustainability themed investment funds, for example, still invest in coal, which by all standards is not green. There is no clean coal or something like that. For the time being, it is quite difficult, I would say, for individuals to really screen the market. I mean, there are some very few financial institutions who have very high ethical and sustainability standards and are very kind of strict on that. So you can look out for those, but kind of your main high street banks, there's the record is still rather sketchy. And that is also why it is so important that we have supervisors, central banks, supervisors set the rules of the game. So we need to have clear guidance from financial authorities that make sure that our financial institutions really change. So we need systemic change, and that has to come from those who govern finance.
Okay, Yuli, thank you for that. Does either of the other speakers want to pick up on that? If not, we'll move on. Bear with me while I remember which button to press. Here we go. Regular viewers will know that we always have a question from Javier. I'm going to pass it over to Javier. He has a question for Yuli.
Hello, good evening. Thank you very much for your talk. It's been great. I mean, one thing is that we still have standards that are not coinciding with what we need to do. I mean, we've got something called levelized cost of energy. I'm not sure if you're aware of that. That has a certain metric, and we also have the social cost of energy, but not that many people are still speaking about that, when it's way more comprehensive and has a bigger scope. What do you think about that? If we are not going to the right metrics, well, that's messy.
Yeah. So I mean, what you are referring to is very important. So kind of our financial system is ruled by metrics. You know, kind of we have all kinds of metrics which basically guide decision making. And the problem so far has been that we have not properly priced the cost of all what economists would call negative externalities. Yeah, so the cost of environmental pollution used to be very low. Yeah, the cost of emitting carbon is still far too low. So we need to get the prices right to have kind of the incentive mechanisms work properly. And markets have not been good at doing that. Nick Stern, who led the famous Stern report on climate change quite some time ago, he described climate change as the greatest market failure ever. And I actually would very much agree. You know, if markets really were to take account of all the negative impacts of environmental destruction and price it in, then, you know, we wouldn't see all this environmental destruction happening, but it is happening. And that is very much an argument why we need public policy to intervene. So that is why almost all economists in the world have been arguing that we need meaningful carbon prices. Yeah? So, I mean, there are different ways, and there's kind of technical differences, and you know, some will prefer one way or another, whatever, but you know, there is almost universal agreement among economists, which is very rare, that we need to have meaningful carbon pricing. Many would say that this should be in the order of £100 or something, whereas in many countries it's actually still zero, or you know, kind of we've seen increases in carbon prices more recently, where they're still far too low and far out from £100 per ton of carbon. So we need to get the prices right, but there is another element of getting the values right, and that is we also need a culture shift in finance. And so fundamentally, the question is, what is the purpose of the financial sector? What do we need the financial sector for? And the financial sector can be tremendously useful. It can be really a force for good. It can help people, you know, finance investment, you know, insure risk. You know, there are a lot of very important financial services that all of us can benefit from. So historically, finance has often been an important driver of development, providing credit to companies, including small, medium companies, and so on, to support development. But the problem is that finance has really become so big, and much of the activities in the financial sector nowadays are completely unrelated to the real economy. Yeah, so to what ordinary people do, what small and medium enterprises do, so there's far too much kind of speculation, kind of rent-seeking, look for short-term profit, and so on. And so I think we need a much greater focus on how can the financial sector support the real economy, and really make sure that social costs are accounted for of all kinds of activities. And the good thing is that we do have indeed now much more of a discussion, and a lot of young people who go into finance say, no, we don't want this kind of 80s Wall Street type of finance. We actually want to contribute to society, and so I do think we have some positive movements in this direction. But it's also very important that, for example, finance, when it's taught at university, also discusses really the social dimensions of and social impacts and environmental impacts.
Yuli, I'm going to. You've taken up quite a lot of bandwidth with the question. You're putting in a lot of excellent points in there, but we have a lot of other questions to cover. What I've picked up that you've emphasized is about a realistic price for carbon, and that banks and major financial institutions should support the real economy rather than simply the virtual or the financial economy itself. I'm going to move on, and you are yourself attracting a lot of questions. So we have one from Bob Pringle about ISO 26000. Over to you, Bob.
Right, thank you. I'm just wondering if the ISO 26000 international standard for businesses has a place in this, in getting businesses to follow sustainable policies and to produce a sort of human face to capitalism.
Is that a question for Yuli?
Yuli, it's for Yuli, yes.
I must admit, I'm actually not aware of this ISO. Sorry for being very ignorant.
Well, it's like all these ISO standards, they're usually about quality assurance, 14001, that type of thing. But this is on sustainability, fairness to employees, environmental care for the environment, health and safety. But the companies that sign up to ISO 26000, it's an aspiration. It's not a strictly binding policy. It's an aspirational policy, which in some ways is policed by the general public. If they see a company which aspires to ISO 26000 is going off message, they can then attack them with their own policies.
Okay, Bob, I'm going to pass that question to the other speakers.
Yeah. I mean, I can give a quick one.
Knowledge of them.
I can give a quick one. I mean, beyond this specific self-commitment, I mean, there are a lot of commitments now regarding sustainability in the financial sector. And in my talk, I briefly mentioned that there is this Glasgow Net Zero Financial Alliance, which also, it's a self-commitment, financial firms coming forward saying, okay, we commit to reach net zero in our operations and in the financing activities that we do by 2050. And this is welcome, but the problem with many of these self-commitments is that the enforcement, is difficult. Kind of companies may or may not do, and you say there is some kind of social control, and I would say that's important to have a kind of strong civil society that checks what companies are doing if they do the walk. But I think we also need more. We need financial supervisors and so on to give a clear steer.
Thank you. Shona, do you have any knowledge of this international standard?
Not of that particular one, but we do. It is one of the questions that could come up when you're assessing a risk as to, what. So if you adhere to the standards, you're presenting a risk which takes their obligations seriously. And at the moment, I can't see insurers saying, oh well, if you comply to that standard, we'll look at you differently. But I think it would be more from a consumer point of view if if I was a client and I was looking at that company and I saw that they were adhering to that standard, I would maybe be more inclined to trade with them, you know, from that perspective. But I mean, insurers like to know all. They like to do as much about a risk as possible, and the more things that a company does to make themselves look more presentable and show their standards, then you know that's a better thing, or that's a good thing.
Okay, I'm going to move on.
Can I add a few? Just one point.
Oh, I beg your pardon.
Yeah, no, it's just because I work quite a bit on accounting and disclosure. I'm also I'm a former business consultant, worked in banking, and I can assure you, whatever you put into any standard, it's all about window dressing. This is how companies view it. It's about how they want you to perceive them. How it really actually affects the business is a very different matter, in particular if you do lots of outsourcing, because actually what do companies nowadays do? Actually, what do any companies do? They're just a brand. They don't necessarily produce anything anymore. So that becomes an issue when it comes to actually policing it. You also mentioned reputational damage. Yeah, that's true. You have this social outcry, but it's very selective. And of course, you don't get, in particular, the business to business at all exposed, because nobody knows about what actually is going on. One point about also pricing is now you see also in the UK, we have this increase in gas prices, and now as a public outcry, oh, we need subsidies. We have to support people again. So actually once, you know, now prices are going up and you should be happy about it because it will cut down on emissions because people will use less. And of course you have an outcry as well, because there are distributional effects and people have to be honest about it. And I think that's the main challenge. Politicians are not very honest.
Okay. Well said, Gerhard. Thank you. I'm going to move on to the next question. And I've submitted this and to Shona initially. Is there a trend towards extreme weather events being classified as acts of God and hence not covered within insurance policies?
So not that we're seeing. It's not to say that there's maybe some insurers out there which will try and use that, but certainly on the policies that that we've had where they've been subject to flooding, no, we haven't seen insurers try to get out from acts of God. They will question things like sums insured, which I covered at the end. That's probably the main thing that they, you know, that they would cover, but no, certainly not from the acts of God part.
Okay, that's reassuring, at least for the time being. I live on the fringe of a flood zone, and if I live there long enough, I'm going to get my feet wet one night, and I don't want it to be classified as an act of God, that's for sure.
Well, it's interesting when you see these flood mapping zones, and they're so detailed, and insurers will they will rely on that 100%, and they don't care. So you can go and take pictures of the river, of the fact that some properties are so high up on a banking and the river is so far below, but they just don't take it into consideration, and it's really frustrating, I have to say.
Yeah, well, I can quote you chapter and verse as a consumer about all of that, but at the moment my feet have stayed dry.
Good.
Thanks. Okay, in strict chronological order, it's my question again now, and this is to everyone. And the question is there any positive news around the vicious cycle that was raised in one of the presentations, that marginal countries are in a pickle with expensive finance, expensive insurance, and a decreasing ability to develop their economies in the face of climate degradation? There's a lot of fancy words in there. I'm going to go to Gerhard first, because I think you brought out the vicious cycle model to begin with.
Yeah. So Yeah, the bearer of good news. Hey, well, I think there is some good news, and I think it's partly driven by technology, and in particular when it comes to finance, also by the power of fintech. So, and also what some of you also discussed is, of course, the role of banks, and of course, banks are very important, yes, but honestly, not for small business, because anyway, they're not usually having any access to corporate banking. So fintech is this combination of finance and technology, where actually you see stuff like peer-to-peer lending platforms popping up. And in particular, in some emerging and also less developed markets, you actually have a very substantial increase of fintech. So, and this is the good news. I think there is some movement away also from banks and bank financing, which is good and bad. There are some issues. We look at China, where non-banks, of course, are contributing to the bubble in the property market. But there are positives, in particular when it comes to access to funding for small companies.
Okay, Gerhard. Does anybody else want to pick up on that question? If not, we'll move on.
Yes, I mean, if Shona doesn't want to go, then I would go. So I would say there is some good news. I mean, one thing is that the problem is now being properly recognized. So actually, Gerhard and myself, we can take a little bit of credit for that, because we worked on a UN report which for the first time showed this problem of a higher cost of capital for climate vulnerable countries, and kind of provided empirical evidence for that. There is now a group of climate vulnerable countries. They're called the V20, but they are now 55 climate vulnerable developing countries that have become very active, and they have been presenting common demands, for example, at the climate conference in Glasgow. And I think this is very important. So them speaking up and saying, we are suffering because of the climate damages that are caused from the emissions that historically have been released, as Gerhard said, by today's advanced countries. This is important. Yeah? So having a strong voice from climate vulnerable countries, there has been not as much progress as should have been, but there has been some discussion around loss and damage in Glasgow. And these are the conversations that are becoming ever more important. And so I would consider that actually good news. And another good news is that many of these countries are also becoming much more proactive about tackling the climate problem. So they are seeking to invest in resilience. I mean, they are hampered by the situation they are in, but there are a lot of good examples also using nature-based solutions to invest in climate resilience and so on. And so not all is despair, but they definitely need more international support.
Appreciate that, Yuli. Thank you. Shona, do you have any comment?
I would just finish off by saying I'm not sure many of these countries have good insurance coverage in effect. So I think that unfortunately, when these disasters happen, an awful lot of it's not insured, especially with the lower end economies, which is unfortunate, but they just don't have as advanced insurance market, I suppose, as we do ourselves.
But I can add a little bit of good news to that. The situation is as you described, but so there's, for example, great work by the Development Insurance Forum, which is working on developing insurance solutions for climate vulnerable countries. And no question that this is not a silver bullet. But there are a lot of different efforts, and all these efforts count, and we need to increase these efforts. But again, there is some good news out there, and it's important that we emphasize that.
Yeah.
And the one of the findings that we had in Gerhard and my work was on investing in resilience can help to drive down the cost of capital. So there is a clear pathway. Investing in resilience, also strengthening kind of governance mechanisms and all that to be better prepared. But as I said, support is needed.
Mm-hmm.
Okay, Yuli, thanks for that. I'm going to move on, and if I could ask the questioners and the speakers to be fairly brief. We are stacking up quite a queue of questions, and we're going to do our very best to get through them all. I'm going to go to Rachel Winter. She has a question for Shona about uninsurable assets. Go ahead, Rachel.
Hi, Shona. I just had a quick question about whether you know what percentage of homes are likely, or if there are any figures about what percentage of homes are likely to become uninsurable in the UK in the next 20 years or so, due to risk of flooding, subsidence, coastal erosion, etc. Are there any sort of estimates for that?
Well, I suppose because the government has intervened with this flood re, that would cover older properties, but it certainly wouldn't cover the newer ones that are being built. But I guess the good thing about a competitive market is that where there is a lack of capacity in a particular area, for example, a high risk area, there's usually an insurer willing to write it. Now, that doesn't mean that it's going to be cheap. So you could argue that you can get a price for everything, but it just might not be the price that you want to pay or you think is reasonable. So we are coming across properties where it is incredibly difficult to actually get cover for. Quite a few in Aberdeen, really in areas where you think, oh gosh, where's the flood risk there? But insurers have done their flood mapping, and what happens then is you get the whole load of the capacity of the market just disappears. So you're left with very specialized markets, and that's predominantly the Lloyd's market will cover that. So it's real specialist niche underwriters who have got the capacity to provide that. The percentage of what it will be like going forward, I mean, goodness, I don't think I could possibly predict it. I would hope that the UK insurance market would always cover or always be able to provide cover for tricky risks, but it's just a case of knowing where the capacity is and who's providing that cover. And as I say, there is always, and that's why I always say to underwriters, there's always a price for this risk. And if a client has got no other option, then you have to be able to present something to them instead of nothing. And that's what we are continually debating with insurers.
Thank you.
Shona, I'm going to come back to you on that for clarity.
Mm-hmm.
Are you saying that under the current regime of insurance companies, underwriters, reinsurers, and the government's scheme, that any homeowner should never be refused insurance against these climate-related risks, no matter where they live?
So we have flood re, which is what I spoke about at the end of the presentation. So providing your home, and it has to be a personal home, it can't be a business, or it can't be a let property, was built prior to 2009. Then all the insurers that underwrite household insurance within the UK have to put money into this pot, which is flood re. And what that's meant to do is it's meant to operate so that clients in high risk flood areas don't pay £3,000 for their household insurance, for example, a ridiculous amount of money. So it effectively subsidizes the people who are most at risk. It's up to the individual underwriters whether or not they choose to write in that postcode risk. So again, underwriting factors will still come into play. Sums insured, listed type of a property. So an insurer, for example, let's just take LV as an example. even though they buy into the flood risk scheme, they might say, well, actually, I'll insure that house there because that ticks all of our underwriting boxes. However, this listed property over here, we don't like listed properties. So they're still allowed to decide within their certain risk factors which properties they want to insure and which ones they don't. And I guess technically, if everyone decided actually they didn't want a property, then it could leave in the mass market. But that's when a specialist insurer would always be able to pick it up. But that's when you start to become, when you go into Lloyd's, it starts to become expensive. So their minimum premium would kick in. And if you're expecting to pay £200 to £500 for your household policy, it may go up to £2,000 because they just won't look at it if it's below a certain level.
Yeah, so if I can reframe the question, it's me as a typical householder, I might get refused insurance from one company, but what you're saying is that there will be an underwriter somewhere in the country prepared to offer insurance, but I may not be able to afford the price itself.
So there's two routes that you can go down very quickly. You can go down the electronic route, which would be you get quotes online, and if you've got a non-standard risk, you would get refused in that area. If you went via a broker, you've got the best of both worlds. So you've got the electronic route, but you've also got what we call the manual route, and that's when we would take your risk and present it to, well, for instance, Lloyd's, and we would present the risk. And we know the insurers that do flood risks and which ones don't as well. So you've got that, we wouldn't bother going to your standard household insurers for something which was really non-standard. We've got specialist insurers and underwriters that would look at that. So yeah, you would be able to insure it. You just might not like the price.
Okay, that's great. Thank you very much. I'm going to move on. We have a question from Adam to both Gerhard and Uli. Uli, about migration and climate change.
Yeah, let's hope the microphone is working okay. Can you hear me okay? Yeah, it's about migration.
At the moment, yes, we can.
It's about migration because no one mentioned it, and this might be a complete red herring, but I recognize that migration might be one of the big consequences of climate change. And yet, isn't migration also very important in economic development and things like convergence that Gerhard was talking about? So I wanted you to say something about migration.
Yeah, if I may start, it's of course it's a very tricky topic. You can't say anything about it nowadays because other people are not again very honest about discussing the impact of migration. But of course, you would expect if a climate crisis happens that you see more migration will lead most likely to political issues, and you will see less openness, you will see less economic integration in terms of flows of people. And it would make convergence most likely worse. But of course, migration is a tricky thing because you have different types. You also have, of course, brain drain as well. Yeah, so that's the other element to it. But most of that is actually things like international students. And of course, as a member of a university, you have to be very careful. But it's also, there was a recent article, director of SOAS talked about this and also was a bit critical because if students come here, international students come here, study here, they also quite often stay here. So here you also have a brain drain. So if you reduce migration, it depends is always who actually migrates. But I certainly see the main effect on political stability. You see it also, of course, obvious in the UK. Migration is still not as high up there in terms of priority, but it's still used by various political parties for their own benefit. And I think that's a serious challenge. And I don't think there is anyone is really prepared what happens if things get even worse, and most likely they will get worse.
Let me come in. I mean, maybe just to say that right now, I think the migration figures for the UK are actually not that great. I mean, of course, there's kind of the channels crossing and so on, but So on a fundamental level, the empirical evidence is very clear that climate change is leading to a lot of internal displacement. The World Bank last year published a much noted report where they estimated that by the year 2050, 216 million people will be displaced and migrate within their own countries. So there are already huge movements within countries typically. So most migration is taking place within countries. But of course, climate change is also leading to cross-border migration. And so the second thing is that there is also strong empirical evidence that the physical impacts of climate change increase political or kind of can intensify political tensions within countries, and then often lead then to intrastate conflict, and also they can lead to interstate conflict. So and we've seen, for example, in the Middle East, with Syria, much of the drama that unfolded there is actually also related to climate change and bad harvests and so on, and then kind of underlying political tensions. If resource pressures that get worse because of climate change flare up, can make things worse. And then to the extent that we have more political instability, that is indeed a major driver of international migration as well. So that is very clearly also a reason why kind of we in rich countries need to pay more attention to the adverse effects of climate change in poorer countries. And so that brings me back to my call before. We need to, for our own interest, support climate vulnerable countries in better coping with the climate crisis, because if we don't, there will be all kinds of spillover effects, including also migration. And it's not that these people want to leave their home countries, but if things get so bad, people are forced to leave, and they have to go somewhere.
Yuli, thank you. Shona, do you have anything to add to that from an insurance point of view?
No, I'm afraid I don't know.
That's fine. I've got an eye on the time. We've got less than 15 minutes, so I am going to break my cardinal rule. I'm going to step out of sequence briefly. I'm going to go to the very last question, and I'm going to ask this on behalf of Hannah. She says, are there any key resources you recommend looking into for learning more about green finance? And I assume that's from a lay person's point of view. So if you have, oh yes, I know exactly the website or exactly the book. If I could ask each of you to pop that into the chat, and then Hannah and anyone else can pick that up before we finish tonight. Thank you very much. And I'm going to go back to Alison about sorting out our banks and lenders and or getting their commitments to be delivered. Alison, over to you.
Yes, I just wanted to know what you felt needs to happen to ensure that banks and lenders stand by their commitments and the actions align with what they actually say they're going to do to get us to net zero.
Yeah. So actually there is now something happening, and that is we have an increasing number of supervisors who not only, as mentioned before, looking at climate risk and so on, and requiring financial institutions to do things like stress tests, so kind of test how shocks, climate-related shocks could hit their balance sheet and so on. But also there's now an intensive discussion about having so-called net zero transition plans. So, for example, Frank Elderson, the board member from the European Central Bank, in Glasgow, and he's chair of this network of central banks and supervisors with more than 100 members. He emphasized that we should have mandatory transition plans, so where basically financial institutions have to lay out how they will achieve the net zero transition and what they are doing. And so having financial supervisors demand financial institutions do that would be a big game changer. So it's not voluntary, basically, it's mandatory.
Yeah, good point, Yuli. Thank you very much. I'm going to go to Rachel Winters. She's already asked one. She's got a stack of questions in the queue. I've agreed with her she can choose just one of them in the time that we have remaining to us. Rachel, over to you. You still with us?
Yeah. Oh, I'm embarrassed. I just popped them in there in case there weren't enough. Okay, I'll ask.
Shall I choose on your behalf?
Yeah, you choose. You choose.
And I'm going to go to there's a question for Shona. If litigants start to win more and more legal cases against fossil fuel companies, for example, with Shell, is there the possibility that oil and gas companies will become uninsurable in the future?
Yeah, wow. So no, I don't think they will become uninsurable. You know, the oil and gas sector contributes an enormous amount of premium to Lloyd's. It's a huge part of the insurance industry. Oil and gas pay a lot for their insurance. I mean, you just have to look even at when you take it simplicity as a joiner or a welder who's going offshore, he will pay substantially more for his insurance than they would if they were just operating on land and not going offshore. So insurers, they do get their money, but then the claim potential is huge. I can't see them becoming uninsurable. I do maybe see them putting in, maybe tightening up on terms and conditions and putting restrictions in perhaps, and maybe putting exclusions in depending how things go. That's generally how they tend to work. If things start going wrong, they tend to put in clauses to protect themselves, or they adjust their policy wordings. So there is a potential for them to tighten up in that area, but they wouldn't be allowed to just not insure that industry. So.
Yeah. And Shona, would the same apply to what we covered in our previous conversation? That is that very few situations are uninsurable. You will always find somebody prepared to underwrite a risk, but you may not like the cost involved. Yeah,
basically, yeah. I mean, you can get everything at a price, and I know some insurers as well. They deliberately price it ridiculously high because they know that no one else wants the risk. So they're like, you know what, if we pick it up at that, then we're quite happy with it, and they're quite open about it. But ultimately, they're seeing a large risk, which potentially the business isn't maybe seeing. But yeah, insurers have the final say, unfortunately. And if there's plenty of capacity in that area, then you create the market which drives down the prices. But when you get into a situation where the market is extracting itself, like at the moment, it's a hard market, and insurers are getting really picky as to what they're choosing to underwrite and why, and they're asking an awful lot more questions as well to get to the point of actually providing cover as well, which is making life tricky for policyholders too.
I know we're short of time, but I'd just like to say that I slightly disagree, and I put a link in the chat with an article, Coal Power Becoming Uninsurable as Firms Refuse Cover. And if I may add that more than 40% of coal-fired power plants are already loss-making. Coal is clearly on the way out, and this will become very uninsurable going forward. And it may be different for other parts of the fossil fuel economy for the time being, but the direction of travel, I think, is very clear.
Okay, Yuli, thanks for that point. We're going to come to our last question. This is from Anne Davidson regarding pension funds, and this is a question for everybody. Anne, do you want to go ahead, please?
Thank you, Jeff. Hi. Yes. Yeah, it was just thinking about people like myself who aren't involved in high finance, but what we do have is quite a big pot of money in our pension funds. And I'll be interested to hear what the speakers thought about how much power that gives us. Is that a really good way to focus the limited effort and time we have trying to challenge some of the, a way into a bit of power for us over the financial systems?
Yuli, do you want to go first on that?
Sure. Yes, I would say that is definitely one of the ways how private persons can become active. So often nowadays you have a choice to indicate, to what extent you're willing to have certain areas in your portfolio, and you can exclude fossil fuels or so on. Some pension funds have divested, so they have said, we don't invest in fossil fuel anymore, or whatever areas, and so the investees, of course, they need to say what they want, and then kind of put pressure on. But again, one little caveat is that investing in ESG themed products, so kind of sustainable products, may not always be entirely sustainable, because there's sometimes, as I mentioned, also non-sustainable stuff in those portfolios, and we need greater transparency here. But it is something you can do.
Yuli, thanks for that. Gerhard, do you have a comment?
Well, as a pension officer for the union, I should know. But it depends very much on how you invest your pensions. If you have really control over it, if you invest yourself, and if you're aware of all of it, of course, you can really steer your investment. But quite often you don't have that much of a choice. It depends. It depends on the pension plan. Of course, regulation also matters, because there's an awful lot of it. That's another issue. And of course, one shouldn't forget, many people don't have anything but the state pension. They have no pension savings. But yes, pension makes a big difference in terms of the power they have if they use it. But in the UK, they are not at all as active compared to, say, the US market, where they really take a much more active role, also in affecting companies' decisions. It's not yet the case in the UK, but an interesting thought.
Okay, Gerhard, thanks. Shona, any comments on pension funds influencing fossil fuel companies?
I would just say that it's down to the individuals. I mean, if I was like the other speaker said, if I had control over where my pension was being invested, and I wanted to have green credentials, I'm sure you can specify companies to invest in companies that have green credentials rather than the fossil fuels side of things. So that would just be my only comment.
Thanks, Shona. I'm going to take up 30 seconds to bring a personal note to this point. Okay. So I am now going to thank all of our speakers, Gerhard, Yuli, and Shona. We've had a fantastic time tonight, and thanks to everyone for some really great questions. And I'm now going to hand back to Alison for final remarks. Over to you, Alison.
Thanks, Jeff. And just to say that when looking at ESG, that you really should look at the definition for that particular organization is for ESG, because they all differ, and you'd be surprised about how much they differ. But yeah, no, it was fantastic to hear everything, and it's obviously very lively, because we even had more questions that we didn't get answered. It's always a good thing, and quite usual in our climate cafes. So do remember to come along to our next climate cafe on the first Tuesday of February, and also come along to the mapping event on Saturday the 5th of February. And if you're in the Glen Bucket area, go on this Saturday for the cool multimedia theatre production by John Bollard. And have a great evening, and a very happy new year. Take care, everyone. Bye-bye. And if you want to catch up on the recording,